The following is a paid program. Advice and opinions expressed during the program are solely that of Heiar Insurance, not WBEV or Good Karma Brands.
And welcome in, everybody, to Taking Care of Business this week, Senior Solutions with Matt Heiar. Matt, Happy New Year. Welcome into the show.
Happy New Year. It's our first one of the year.
First one of the year. It seems like it's been a year since I've seen you.
Yeah, it has. It's been a while.
Our producer, Wally Lukashinsky, loves all those dad jokes about the years switching over. So if we fit a few of those in, not sorry, Wally. It is the new year, though, and I guess we'll start with the pleasantries. The holiday went well. Christmas went well. I know we talked a little bit after Christmas. Before Christmas. We didn't talk after, did we?
No, we did not.
So Christmas went well.
It did. We had sickness run through our household.
So as well as could be expected for the holiday season and sickness being a thing right now.
Yes, and it seemed like everyone around us, like they're like, oh yeah, my neighbor had it, oh my cousin had it, and it's when a lot of people meet together, I guess that can happen. But
right.
Yeah, we were in church, and right before our Christmas Eve, where we go to my parents' house, and my oldest looks at me and he's like, I gotta go to the bathroom, and yep, so we did not have Christmas Eve, so it was interesting, but
right.
That's the holidays, and we made it through, and everyone's healthy and happy, and he's at school now, so we're good to go. We're ready for 25 now.
There you go.
Battle tested.
And we are now fully in 2025, and I guess when I think about, New Year, people think about starting over, people start thinking about their New Year's resolutions, and, we get very positive for the future of what's ahead. And I guess now is probably a good time to start looking at some of those future ahead things that maybe we didn't talk about in 2024. But
great segue.
Yeah. Thank you.
That was a great segue. But yeah, no, absolutely. So that's why, we got through our enrollment period, and now it's everyone's set, ready to go for 2025. But it doesn't mean we still can't be reviewing. Because just because we didn't see you in the fall doesn't mean we can't, set up an appointment and just go over some things. We can't make a lot of changes, but there are some things we can do still. Retirement planning obviously is never ending, so we always can be doing that. But like with the aspects of like a Medicare supplement, those do not have enrollment periods because they're policies. So everyone that's on a Medicare supplement will typically, they like it. They're like, I don't receive a bill. It's great. And that's exactly how they're designed to work. All companies are designed to work with, if Medicare approves it, your supplement has to follow and fill in the gaps of Medicare for you. So, but if we're fortunate enough to potentially, shop it and look at some other companies that have the same benefits, but just a lower premium,
right.
We answer some health questions, and if they approve it, we could technically switch in January, February, March, throughout the year, and it would just start first of the next month. So, there is some changes that we can do. The one-year contracts, though, those are the Advantage plans and the drug plans. We're locked in. So that's why we have the enrollment period. So really, we could, there is another enrollment period going on right now. Hate to say it, but there is.
Is this that extension to the marketplace enrollment period, or is it something different?
This is something different.
Okay.
So the extension for the Affordable Care Act, goes till January 15th. So if you're under 65, we could technically, if we sign you up for health insurance, it would start February 1st. So that's that. And then there's an open enrollment period where that's where you, if you're on an Advantage plan, one of those one-year contracts, you could switch to another Advantage plan without any health questions. It just kind of does that because I feel like they designed this enrollment period from January 1st to March 31st for you switched, you made a quick decision, you didn't really look into it because they told you everything, and the grass isn't greener on the other side.
So it's like a CYA period?
Yeah, so you kind of used it and you're like, this isn't what I thought it was. You have the ability to switch from Advantage plan to Advantage plan till March 31st. So if I sign you up March 31st, it would start April 1st.
Okay.
If we sign you up today, it would start February 1st. So there is still time, and there's always time, even if we don't do anything. And that's what a lot of the appointments are. We come in, hey, this is what you got. This is what we discussed earlier. How are things going? And usually we do nothing.
Right.
But you're leaving with peace of mind knowing that, hey, okay, that's why we picked this. That's why we're doing this.
Right.
And just, another way to feel better moving forward for 2025.
And it's good knowing that you're on the right plan for whatever your price point is, but also covers the important things for you, be it the doctors you want, the medicines you want, whatever, and know that there's not a need to make a change right now. That could be stress relieving in a way.
Absolutely. And it's been a unique week back, because it's a short week. But I have had some phone calls. So another thing we do besides the estate planning, when we have, Rob with us that, does the wills and trusts and power of attorneys, we also do something called funeral trust.
Okay.
Ooh, what is that?
Yeah, that's one I haven't think we talked about before. So
we
let's do
haven't. That's because typically I try to talk you out of them.
Okay.
Yeah.
Doing a great job, Matt.
Well, it has to make sense.
Okay.
So like a funeral trust, what it is, it's an irrevocable trust. And irrevocable means once you make the decision, we can't change our decision.
Okay.
So the state limits them, and we can only put up to about $15,000 into them. Doesn't mean you have to put $15,000, but that is just the maximum. So that is safeguarding money for burial. So that's where if we have like a Medicaid situation where we are going to a nursing home and our assets are getting spent down, we can safeguard $10,000, $15,000, whatever it may be, for a funeral trust where the state can't have access to that.
And this is like a major illness, drains everything, all the money's gone. At least there's something so the kids or whoever doesn't get stuck with those final expenses.
Correct.
Okay.
So that's why I talk people out of it, because they come in, they're like, I want a funeral trust, and they're 65, 70. I'm like, oh, well, if you pass away tomorrow, do you have enough to pay for a funeral? And they're like, well, yeah, of course. Well, then why do we need a funeral trust? You have enough to do that right now. So basically, everyone's big fear is like, oh, if I go to a nursing home, all my assets are going to be gone. It's $10,000 a month. What am I going to do? Well, right. That absolutely is true. That's scary stuff. And so we use funeral trust as a tool, because say you go to a nursing home,
right?
You can't just be like, oh, well, I have a 401k with $100,000 in it. Here you go, kids. There's what we call a look back period. So the state, once we apply for Medicaid, they're going to say, where did all your assets go?
Gotcha.
And if you're like, well, I gifted them away, we need 5 years clear. So we need 5 years to be like, so that's what they're going to look. They're going to look at your checking statements and banking statements and all your assets for the last 5 years.
Right.
So, but a funeral trust does not have that.
Okay.
So that's why I talk people out of it when they're younger and they have enough for a funeral. If heaven forbid that did happen. But if we go to a nursing home and we know how much it's going to be, and we know our assets are going to be spent down in 6 months, 10 months, 2 years, whatever it may be, that's when we do it.
Okay.
Because there's no look back period. So we use it as a tool to safeguard money, so we don't have your family paying for a funeral, and we can protect a certain amount of your assets,
right,
and still be on Medicaid. So that's why it has to make sense.
Gotcha.
So that's why, and it can be done. It's basically 2-3 signatures. We write a check and we send it into the company, and then you have a funeral trust, and you can go to any funeral home you'd like. So they're universal, and they pay out a lot quicker than an actual like a life insurance policy.
Gotcha.
Life insurance policies they're fun, to get.
Right. I've heard horror stories of like, we need a death certificate. Well, we need to see the body.
Yeah.
Well, can you have the deceased call us and let us know they're dead? Whatever.
Yes.
Right.
And then if there's multiple beneficiaries, we have to have every beneficiary fill it out, their paperwork, their copy of the original death certificate, and everything has to be in good order before they start paying out. And insurance companies don't call you and say, hey, I owe you $50,000. Did you know that?
Right.
So,
you gotta hound them a bit.
Yes. So that's why the funeral trust is just a little bit easier, and then the funeral company actually just or the funeral home just bills out according to the plan. Now, if the state is paying for your nursing home care, and they're owed money, obviously, because they're paying for your stuff. So say you only spend $10,000, but you have $15,000 at this funeral trust. the company will write a check to the beneficiary for like $5,000.
Right.
That is not your money. That technically money was for burial. So if there is extra assets, the state is entitled to that also.
Gotcha.
With me saying but not saying, we're having steak and lobster at the funeral. It's going to be a $15,000 funeral.
Gotcha.
Or $10,000, whatever we decide to have at that time.
Real good send off.
Yes, but that's why, there isn't a right or wrong answer to it. It's a very situational product, so it's not like we promote this, but it is another one of our tools that we use in certain situations. And it doesn't make sense for a lot of people, so that's why everyone hears about it and they're like, oh yeah, I want that. Why? And we kind of talk about it. And because to lock up that amount of money, what if our furnace goes out? Do we have that emergency fund to pay for that?
Right.
Or was that part of that $15,000? So it's all very situational when it comes to those. That's why they're a unique product. They're not used with every one of our clients. They're not recommended with every one of our clients. But when we do have that meeting and talk about it, it has to make sense, and you have to understand why we're doing this. And so sometimes it works, sometimes it doesn't, but that's why we call it Medicaid crisis planning, because we we're doing it all pretty quickly.
Right.
Before we get into the nursing home, or once we do get into the nursing home, that's when, that idea might be flipped out there for you.
And that's where that irrevocable comes in, is you've put that money aside, it's there, there's no going back on it. You can't be like, I changed my mind, I need that back for something. It's
correct.
It's locked in.
But even with an irrevocable trust, like if you have a farm, because those irrevocable trusts aren't used that often, because once the decision's made, there's no changing it.
Right.
So even if you have a family farm, that's sometimes what they're used for. Yep, my son, he's been farming. He wants to take it over. I want to keep the farm in the family name. We're going to do an irrevocable trust. Well, 4 years down the road, if you have to go to a home, you're going to have to pay for 1 whole year of private pay before we can get on Medicaid, because there's a 5-year look-back period for it.
Right.
So that's why the funeral trust is kind of like a Swiss Army knife, because there's not a look-back period. We can only do so much, and it's for one thing and one thing only, your burial.
There you go.
So, yes, it makes sense. And I know we haven't brushed up on a lot of it, but that is just one of the things we do at Heiar Insurance.
And I guess this really kind of shows a prime example of that. I heard about this somewhere. I saw it maybe in a seminar, read it in a brochure or whatever, and I just decided, oh, well, I have to have this.
Yep.
So they come in and see you, and that's why you're knowledgeable, and you can say, actually, you don't have to have it. Mm-hmm. If you want it, we can make it happen, but let me explain why you might not.
Yep, because, well, it's locked up. The money is locked up. And if you have enough in your emergency fund for a funeral, hopefully we don't have to use our emergency fund for a funeral.
Knock on wood, you're good, but...
Yep, so that's why, it's your money is liquid. It's not just stuck in that trust. And that's why it does make sense a lot of times for protection, but at the same time, it's very situational, so they make sense and they don't make sense. And not everyone just has $10,000 like, oh, yeah, here.
Right.
I can't write that check. So that's why, then if we don't have that situation, then we would go to a life insurance policy. A little bit more difficult for the death claim, but at the same time, then we're only paying $30, $40, $50 a month to have that $10,000, $15,000 death benefit for the funeral.
Gotcha. Now, if somebody comes in and says, I want to do this irrevocable funeral trust, you said up to $15,000, and they're like, well, I've got $10,000 I want to do, can they come back later and add to it to get it up to that 15?
Irrevocable trust.
So that means no changing even.
No changing. So what we would do, because that happens, we would create another one.
Okay.
So you can have 10 of them, but they can only equal $15,000.
And regardless of how many you have, they all have to be used towards that final expense.
Yes. So sometimes if people are like, I only have 7, but I know a funeral is going to be more than that, sometimes we wait, and kind of maybe they just put it in CDs or something like that and, let it grow a little bit. Or we wait until they get a little bit more, and then we'll do one. Okay. But great question.
Are there other products like this where people come in and they're just all gung-ho for, like, I have to have this, and you have to kind of pull the reins a little bit?
Life insurance.
Life insurance.
Hands down, life insurance. Because people are like, yep, I want a $100,000 policy.
I know I was listening on the radio the other day, and I feel bad saying this because, of course, we work in radio. But you hear these ads on the radio, and, the people pay us to run them, so we do it. But you hear these things like, oh, well, you can have, it's pennies a day, a $2 million policy, and no health questions. And in my brain, I'm going, I've talked with Matt Heiar, and I feel like those are probably three very different plans. And they're not telling you that that's not all on one possible plan.
But it got you to call, didn't it?
It would definitely get me to call because I'm thinking that's a decent amount of money if something happens to me. That definitely pays all the bills, takes care of everything. No health questions. They don't care that I'm a gentleman of substantial presence. And for pennies a day, well, who can't afford pennies a day?
Right. And that's why, if it's too good to be true, typically is, the cheapest life insurance would be term because it's for a term. It's 5-year, 10-year, 15-year, whatever it may be. And then with the goal not to renew it because they're like, yeah, you can renew it. It was $100 a month, but now it's $500 a month. No one's going to do that.
Right.
But it fixed, it solved the situation for that term. What we were, hey, my house is paid off, in 15 years. I just want to make sure I have X amount of dollars to pay it off. And the next cheapest way to get your term at pennies on the,
Right.
on the dollar would be health underwriting.
Okay.
So the healthier you are the healthiest right now, right?
Chances are, right.
And that's why there's no time like the present to do that. Would be health underwrite. Let's see what they say. And sometimes, the underwriters, I don't get along with underwriters because they'll look at your second grade ER visit. But at the same time, if it makes sense, we do it, but we need a reasoning. We have to justify to the regulators, like, why are you giving this person this policy? Right. It's not like back in the day where someone would come with a suitcase to your door. Here's another $5,000 policy. And I just keep coming back to that person every year. We got to justify why we're doing this. And our changes in needs for life insurance are different.
Right.
Like typically when people are younger, they're coming in, hey, just bought a house, just had a kid. I don't want my wife to have to move out.
Right.
If, something happens. Okay. So we need a term of X amount of years to solve that. Then there's also situations where people come in their 60s or 70s and said, I don't need $100,000. I need something for burial. And let's see, our needs and wants and our debts are different throughout stages of our life. Now, if you are 70 and just built a new home or a lake home or something and creating all this debt, you might need a term policy just to bridge that gap so we don't have a lot of debt transferred over to our next of kin.
Right.
So it's so situational, but those commercials are frustrating because there's always fine print.
Right.
My only recommendation for life insurance would be A-rated companies because so many life insurance companies come out with stuff like that you've never heard of. And they're like, oh, yeah, pennies on the dollars. And they might have cheaper introductory rates, but then they merge with this company and this company. And then we try to do a death claim, and we don't know who to call.
Right.
And we're calling, and the customer service isn't great, and it's very, very frustrating. So insurance companies really don't, close or become, insolvent. They merge,
Gotcha.
So that's why, kind of like banks, right? Banks are buying,
Right.
big banks buy little banks, and but that's what happens with insurance companies too. But we want to make sure you have A-rated company, been around a long time, and they're going to be around in 20, 30 years.
Right. Especially if you have to use that policy.
Right.
Yeah.
And then on the other hand, there's what we have. It's called whole life insurance or permanent insurance. And that one is more money because the insurance company is 100% going to pay that death claim. And what it does is it locks in a rate. So if you're 35 years old and you sign up for a $100,000 policy and it's $100 a month, they grow cash value. So that is one thing. It's not an investment whatsoever.
Right.
But no matter what, that it's going to be locked in at that premium rate. So that's good. And also that insurance company will pay that claim no matter what, because it's permanent insurance.
I'm going to start by saying, of course, as a reminder to everybody that this is a paid program. The advice and opinions expressed during the program are solely that of Heiar Insurance, not necessarily WBEV or Good Karma Brands. And I'm thinking we're going to lead into the part of the show that I'm going to call today. Ninja asks a lot of stupid questions. You ready for this?
No such thing.
Let's start with terms. So let's say you get a 15-year term policy because you have, we'll say, 15 years left on your house payment, and you know that will cover you if something happens. Mm-hmm. That pays out only if you pass on within that 15-year window.
Correct.
Once 15 years is up, the policy is gone.
Well, no, they
Or
send
they'll
you a
try and
letter
renew.
saying you could renew it for this rate, and it's outrageous. And that wasn't the goal when we first took it out.
Right.
But
it
yes.
was just to cover that window that you needed for.
Correct.
Now that's then kind of acts a lot like your car insurance in the sense of you paid into it, but you were just paying into it. So when the time's up, if you don't renew, whatever, there's no value there. There's no money pool. There's no nothing. It's gone. Mm-hmm. It was just coverage for that window that you needed it for.
Yes.
Okay.
It's peace of mind.
And are they, like, if I've got 13 years left on my house, do I get a 13-year term, or is it generally done in like 5s,
It's
10s?
usually 5s.
Okay. So that'll give you a little bit of a window there. So that's good to know there. Now let's get into the whole life idea. You said that you kind of build a pool there. Is that when you hear them say like, oh, and it's a value you could borrow against? Or,
Yep. Absolutely. So it does build cash value and gets dividends, yearly dividends, depending on the company you have. So, and yes, you can take a loan out from your cash value, which people do. You could invest it, you could, or if the furnace broke down, but you do want to pay those back. And if something happened where you didn't pay it back, they take it off the death benefit. So it is kind of a Swiss Army knife.
right.
So you're paying for it though, but it's just another tool we have, in the retirement game, basically, where we could utilize that if need be.
Gotcha. So it's not like, because for some reason in my brain I was thinking, well, it doesn't build value until you reach the value of the insurance, right? So if it's a $100,000 loan or $100,000 policy, then it doesn't have any value to you until it hits $100,000, right? But you're saying it could have a pool of value before that.
Yeah, like if you've been paying and it's worth $20,000, and then some companies they have like, well, you can only take a loan value of X amount of dollars. Like it'd be a percentage. Like you can only take 50% out or 80%, whatever it may be, and then you are paying an interest rate on that, but also getting a dividend. So you could, be getting a 6% dividend, but you're paying a 4.5%. So you're not getting a lot on the actual. So you want to pay those back, but situations arise where we might need to. And it's essentially tax free because it's a loan,
Right.
At that point. But that's why it just has to make sense. So whole life isn't for everyone. I would say I do a lot more term just because it's affordable, it's peace of mind, and I don't want you to use it.
Right.
It's just. You have peace of mind knowing that your family, your kids can still go to college, or they don't have to move out of their house, and that's what it's for. But we do not want you to use it at all. So we have to like steer people back, because some people just come in with these, like mindsets of like, yep, I want 500,000. Why? And it's like, well, wouldn't that be nice?
Just want to make sure my wife has $500,000 in her pocket when I go.
Yes. Do you have any debt? No. And it's like, well, I don't know if this really makes sense. And another big thing, people come up to me, they're like, hey, just give me a quote, $200,000 policy. And it's like, I have no idea what the underwriters are going to say.
Right.
So they might rate you at ultra preferred, and yes, you could get it even cheaper than that.
Right.
Or they might say, hey, you have X, Y, and Z, you're pretty risky. We're not even going to insure you. So that's why it's cool being an independent agency where we have a broker that, we can go to every different company, and see what they say. Once again, only A-rated companies though. So it's all very situational. It's free to be underwritten.
Right.
So when you come in, you're like, yep, let's go with it. That does not mean we are signing up. We are applying for it.
Right.
Then the underwriters or the telemed, the nurses will call you. They come over, they do a blood draw, check your blood pressure, height and weight, and stuff like that, urine test, and it takes about 15, 20 minutes. And then it goes to the hamster wheel actuaries, they're the ones who ultimately rate you at X, Y, or Z. And that's when we move forward. That's when we start looking at prices.
Now, it maybe come across as a weird question, but I think about this because I think about I have family members who they like to give blood for the American Red Cross.
Sure.
And they don't like needles, however, but they want to do their part. So going in, it's usually let's check your blood pressure, let's check your heart rate. You need to relax a little bit. We'll come back in 5 minutes. The second check, they're like, okay, you're doing better now. Is there that kind of wiggle room when they come in and they do this underwriting? If you're like, look, I don't like needles. There's a stranger in my home. Of course my blood pressure is going to be high. Of course my, the numbers might be a little bit off, and you can kind of argue that a little bit to get you better, or are they pretty sticklers?
They're sticklers. I mean, I've had people actually do it at our office.
Oh, okay.
So they'll meet you wherever. They've met people on their lunch hours, at work, or they'll come to your house. The needle thing, get that a lot.
Right.
Because obviously who likes needles?
Right. Very few people, except for people who really love tattoos, I think.
Yeah. There is, I talked to another agent and he said that you can request, it's a certain company and they have thinner needles.
Okay.
So the blood draw is longer, but it's less invasive. It's obviously not as much of a poke. It's still a needle.
Right.
In the end of the day. I would just recommend just going with the standard because no one likes it and it's much quicker if you the blood draw literally is, they're not taking, this isn't giving blood. So they're not taking a pint of your blood. They're just getting a sample. So yeah, there isn't a right or wrong answer. And some people especially my younger clients, they don't even do a blood draw. They look at your records and they're like, well, you're healthy. You go to the doctor every year. Everything's great with your labs, and they just approve you.
Okay.
But the whole life, if they're going to do a whole life policy, they're still insurance companies,
right? And
they're guaranteeing that they're going to pay out X amount of dollars. Yes, they are definitely going to do a blood draw.
Yeah, they want to know they're going to get as much time as possible before paying that out, and it's not going to be a week down the road. None of us know with crystal ball when our number's up, but they're playing some odds there.
Yep.
Is there a particular between the term, the health underwriting, and the whole life? Is there a one that asks less questions, the one where they're not necessarily as concerned? Because sometimes you hear, like I said in those ads, oh, no health questions, no health screenings whatsoever.
So there is what we call guaranteed issue products. That's what you're hearing on TV.
Right.
And it's just funny because they're like, he is 75 years old and he's getting $1 million without health questions for $20 a month, and it's like, wow.
Right.
That insurance company would probably dissolve very quickly, because they're taking on a lot of risk, and that's what it is. It's risk, so it's the transfer of risk. So they're not going to do that. But the guaranteed issue products typically are more expensive because they're taking on more risk. And then there's always a catch. There's contractual language with all these, so you got to be careful. Because there is a bunch of crappy policies out there where they're like, yep, every 5 years it goes up. And it's like, oh, they never told me that.
Right.
I thought this was the price. We don't want to get into anything like that typically, but there is a lot of value in, the guaranteed issue products typically it's within the first 2 years once the policy's issued, they will only pay out if you die accidentally. Now, if you die of natural causes, that's when, and that's just protecting the insurance company, like someone's terminal.
Right.
I'm going to get one of those guaranteed issue products quick.
Right.
And then obviously they won't pay that out then. And you should be aware of this kind of information moving forward.
Do they play the semantics game where it's like, well, it was an accident, he got hit by a bus? Like, well, yeah, but naturally that would kill you.
No, I haven't had that.
Okay, thank goodness.
Yeah, if you pass away in a car accident or something, they're gonna be like, well, was it natural or not, or did you have cancer at the time? And no, I haven't seen that. I've heard horror stories, and stuff, but that's why you want reputable companies, and cheaper isn't always better. And that's the biggest thing when it comes to life insurance, because once you use it, hopefully you don't, it could change your view on life insurance big time, or companies in general. It's tough, and that's why, like I said, they do not call you and say,
Right. Yeah. We owe you money. And I mean, this really kind of, again, exemplifies, you may see this in a back page of a AARP book or something where they're paying for advertising space and think this is the right thing to do. But having somebody you can go to and talk to locally who can say to you, like, oh, yeah, they've only been doing insurance for the last 6 months. They're, not an A-rated. They're not whatever. That could be very, very helpful.
oh, absolutely. And that's where, we have helped fill out death claims, and that's why I like to work with a lot of companies that I know their process, their procedures. They change, obviously,
Right.
Once in a while and stuff, but it's usually just the paperwork difference. But yeah, like if you signed up with me, I would be like, all right, we need this, this, and this. And one big thing with all companies, make sure you get multiple death certificates, because there's a lot of times that people ask for it,
Right.
whether it's life insurance, whether it's pension funds, whether there's
And they don't want photocopies.
nope. So when they ask you how many would you like, just get multiple ones just in case. Some do accept copies, but it's just another process, and you have to pay for them too. So I would get multiple copies at least, because typically beneficiaries, we have more than one. I have 3 kids. There's going to be 3 beneficiaries. Well, then we need the paperwork filled out, all in good order, by all 3 of them, 3 copies of the death certificate, and they all have to be
Even
sent
if they're
in.
all going to the same place.
Correct. And it's, yeah, if, all your family lives in Beaver Dam, perfect.
Right.
But it's never like that.
Of course not.
Brothers in Ohio, sisters in California, and to try to, commingle that. And then hopefully the company didn't merge with these other people, because the customer service just isn't that great when it's a larger company that, yeah, they bought this little company, and, the customer service isn't great. They're like, wait, what policy number are you saying? All our policy numbers start with A, and they're like, I don't understand. And it's because they're taking on these blocks of business and these old policies. Very difficult.
Now, I just thought about something that you had said where you were talking about how you will help fill out the paperwork for these insurance companies. That has to be a huge relief. I mean, when people are grieving and your brain isn't always in the right space, you're not always thinking about things, and having somebody who can look at you and be like, hey, I know what you're going through. I know what you're feeling right now. I'm going to do my best to help you. Very regimented. Here are the things I need so that we can take care of this to give you peace of mind.
Oh, absolutely.
That way you can take that time to focus on your grieving or whatever.
Yep. That's why I preach local all the time, because even like, with our retirement planning and stuff, like when you have an inherited IRA, there's paperwork,
Right.
So people come in, and that's the last thing I want you to worry about. And we deal with a lot of, widowed spouses, and basically it's step by step. We have to just, let's start with this. Let's cancel the insurance, right? We'll get the paperwork for the death claim. We got to transfer this inherited IRA over to your name as an inherited IRA. We have to take it step by step. We can't just solve the world's problems in one, but you leave that to us. We'll take care of that. We'll call you when the paperwork's ready. Come on in. You don't have to worry about that. You have other things that are going on.
There you go. I like it. We talked a little bit about, what happens to these non-A-rated, the smaller insurance companies out there that might dissolve and get bought up by larger insurance companies. What, if any, is there protection for people who maybe have policies with them and then that insurance company does dissolve away? Are they just, out to the wind?
Well, though our insurance commissioner does protect us a lot with these companies and stuff, and they will just take over a company if they don't like what's going on. Very rare that that has to happen, because typically our insurance commissioners have to approve these mergers, and and sometimes they do not. But it's just really tough when they're like, well, I haven't got any statements once they merged, and that's what gets scary. It's, did mom or dad have a policy that we don't know about?
Right.
That, and so we want to make sure you're up to date and having transparency with the kids or the beneficiaries, whoever that is. We need them to know like what's going on. But it's just a step by step, and that's why cheaper isn't always better. And those commercials, just kind of like during the annual election period, they're frustrating.
Right.
Because you wanted a policy for $11, $11 a month, and after the phone call, you're paying $154 a month because I didn't want health questions.
Right. And I guess if anything, you should really use those kind of commercials as more of a audio and visual reminder to, reach out to your local, reach out to Matt Heiar and the team there at Heiar Insurance and ask them the questions. And then, you're talking to somebody local. You're not talking to somebody who potentially could be sitting in a call center who does this, 1,000 times a day for whoever dials the 800 number.
And you will never talk to them again.
Yeah.
But shopping it too.
Right.
Absolutely. Companies, even the A-rated companies, they start new blocks of business. They come out with introductory rates. And if you hit that time, perfect. That was excellent. That worked out. So that just doesn't. Now that's when cheaper would make sense.
Right.
Hey, they're both reputable companies. I have my homeowners through them also too. I know they're going to be around, and they gave me this offer. I couldn't pass up. Perfect. And that's why a lot of people bring in their life insurance paperwork. They're like, should I cancel this? And that's like my biggest fear.
Right.
Like the day I say yes, cancel it, and all of a sudden,
Right. Something tragic.
So we have to just go through it. Could you health qualify to get something else?
Right.
What is your debt? What is your income? Do you have a funeral trust? Do you all these different things we have to go through, and we decide together what is the best option for you.
Now, we talked about the underwriters and everything, so I assume there's some sort of communication, because I can't just come in and be like, yeah, can I get a $500,000 policy? And then 6 months later be like, hey, can I get another $500,000 policy? And just keep racking these up. At some point, they're going to be like, well, why does he need $8 million in policies?
Right. And that's why the applications from even when I started to now they need to know your net worth. They need to know other insurance policies you have, other insurance policies that I sold you, and because, the underwriters right away, it's all liability. So
Right.
I've had people, I signed up my brother actually for his daughter. So I signed him up, and I signed her up with a policy, a juvenile policy, and the underwriters called me right away. They're like, well, why is he getting life insurance on her when he doesn't have any? And I'm like, well, I told them to, and he didn't,
Right.
but they are looking into it that in depth, where it's like, it has to make sense.
Right.
Because there's a lot of red flags when it comes to life insurance, and you hear all the murder.
Yeah.
They're like, oh, he raised the life insurance policy, and then all of a sudden this happened, and so there is a lot of that stuff that goes on, and scary to think about. But I haven't had any situations like that, but that's why, I feel like the majority of the time I'm talking people out of life insurance. I'm like, well, it doesn't make sense. The younger people, absolutely. You have debt. You don't want your family to move. That makes sense.
Right.
Take out a term policy, whatever the cheapest is with a reputable company. Yes, it's something, and it's tax-free money.
Right.
So it's not like an IRA. You get $100,000 payout, you get $100,000. And then what are we going to do with that moving forward? How are we going to preserve that? For the kids' college fund and so on. So it's it does make sense for some people, but yeah, if you come in when you're 70 years old with no debt and be like, I want a $200,000, $300,000 policy, it's like, why? Why does this make sense? Because I'm going to have to answer this to my broker dealer, to the regulators, and it just doesn't make sense.
Well, and there at Heiar Insurance, you guys cover so many variety of things that, you guys have the ability, if somebody comes in and starts talking to you and saying, hey, I need life insurance, I need to plan for the future, and they think that is their, attempt at a retirement plan for their spouse, or their legacy planning for their children if something happens, where you guys can pivot them to actual retirement plans and actual legacy planning that makes sense and works really better for what they need.
Oh yeah, that's why it's so much easier, talking with people that I'm actually are my retirement clients, because I know their net worth, I know their assets, I know their beneficiaries, and I know if it makes sense or not. But when you come in for just a consultation without me knowing anything, I'm prying. I'm asking a lot of questions, because these are the questions that I'm going to get asked if there's any, I shouldn't say red flags, but just like, cause for concern where they want a follow up or, an explanation. And I have to know that. You have to know your client. You can't just, oh yeah, bring that suitcase up and
Right. I've heard once way back in the day, somebody said like, well, really good life insurance policies are really kind of reserved for the people who already have money, already have whatever. So it's like, well, I've got a retirement account. When I retire, I'm going to have, $2.5 million, and my house is paid off. I've already got a boat. I've already got a car. I'm going to be sitting pretty good. But then I also have a $1 million life insurance policy. And the only reason I have that is because I have so much money already. Is that necessarily true, or?
Oh yeah. Yeah. People transfer wealth that way. People take out life insurance policies for their kids for taxes, because, oh yeah, dad had $2 million in his IRA and didn't spend it and passed away. Well, now the kids have a tax liability.
Right.
So there is situations like that. That's why it can be used for so many different things. But the most broadly used situation is just younger generations has debt, young kids, we need something, and that's typically, why we would justify it. And then once we get older, we have no debt, we want burial. Okay. That makes sense.
And so having those plans to be able to pivot from one solution to the next solution, again, that's where talking to you guys can really help, because you can help transition people from one to the other.
Oh yeah. Yeah. And like there is times we will cancel a policy or replace a policy, and there's replacement forms that our insurance commissioner is looking at, saying, why did you do this? And we have to, make sure everyone is on board and everyone knows why this was done. Not just us, like actually the regulators, broker dealers, compliance officers. So, and that's where the checks and balances I feel like are so much better nowadays. It's more paperwork,
right?
Not so much fun for me, but it just, it gives me peace of mind too, knowing like, hey, this was the plan, this is why we did it, and it makes sense. Even if we have the discussion and do not move forward with it, it's documented that we talked about it, this was presented, you didn't want to go with it, and that's fine. But so it's not. That's why it's just so much fun. How in depth we went with this conversation, and so many people are like, "Shoot me a quote," and it's like, well, it's a little bit different than that, and it's.
So giving people ranges anywhere from this to this.
Yes.
Yeah, that's what I can quote you.
Yeah, you look kind of healthy, and
sure.
But we don't know, and that's why. Yep, we just take it step by step, but. Yeah, the underwriters, they look at everything, and so they should, obviously. But, so life insurance that's one of the biggest ones where people, they're like, I need this. I heard the radio ad.
Right.
And it's like, well, why?
And so obviously, I think the big takeaway here is, a lot of these products are way more complicated than you are going to get a full understanding from in a 30-second radio ad. And that's why you definitely need to get over there and see you and the rest of the team at Heiar Insurance, which let's remind everybody how they can get a hold of you, how they can find you, so that they can come and ask you those questions and not just shoot you a text for a quote.
Yeah. If you want Medicare, retirement, life insurance, estate planning consult, just give us a call at 920-887-0580.
There you go. And, of course, as we have to end the show, do you want to remind everybody of the amazing tagline that Heiar Insurance has?
Oh, yes. If you want to retire,
you got to call Heiar.
Call Heiar.
There you go. I want to thank you. Every time you come in, Matt, I learn more and more, and I am blown away. The funeral trust thing, I had no idea what that was. So every time I learn a little bit more, and I feel like I'm even more ill-prepared. So I'm definitely going to have to get over and see you guys sometime soon.
It's a new year.
It is a new year. New year, new planning. That's one resolution I think many people should be keeping. So thanks for coming in today.
Yeah, absolutely.
This has been a paid program. The advice and opinions expressed during the program are solely that of Heiar Insurance, not necessarily WBEV or Good Karma Brands.